Welcome students to another lecture in the series. Let us continue with the head income from salary. In last lecture we finished the heading, the topic perquisites. Today let us begin the important topic here out, that is retirement benefits under the head income from salary. To ensure that employee and his family live a reasonable standard of life, employer takes several provisions and pay benefits to the employee after retirement, and such benefits are given in the form of salary in lieu of the leave, or that we call as leave encashment. This is actually the amount which employee gets when he does not take a leave. A leave is being provided from the employer's side, but he does not avail that leave. So it goes on collecting in his account and he gets the amount at the time of retirement or at the time of leaving the job. Then comes gratuity, pension, provident fund, VRS, that is voluntary retirement scheme. Then retrenchment compensation. Let us see one by one. Leave salary, I told you that it means the salary that is received for leave which has not been availed by the employee. Gratuity is the lump sum amount which is paid by the employer to employee on retirement or resignation or retrenchment or death as a reward for the sincerity and continuous service which is rendered by him. Payment of gratuity is compulsory for certain class of establishments under the Payment of Gratuity Act 1972. Pension, you know very well, is received by an employee after the retirement, and it is a regular payment which is made by the employer. It may be payable monthly or quarterly or annually. Then comes your provident fund. Provident fund is an account where employee and employer both contribute every month a specific certain percentage of salary for the benefit of the employee, and this amount is invested monthly in some designated securities which earn interest. Every month this amount accumulates and increases, and at the time of retirement this amount is paid to the employee collectively. And it is also sometimes called a superannuation fund, and it has basically four components, that is employees contribution, interest on employer's contribution, and interest on employees contribution. Now, superannuation funds further are usually established on a trusts by an undertaking for the purpose of providing amenities to the employees of the undertaking on their retirement at or after a specified age, or on their becoming incapacitated prior to such retirement, may be due to certain physical inability or so, and for the widows, children and dependents of the employee in case of any employee's early death. The trust invests the money contributed to the fund in the form and mode prescribed. Let us see one of all of these benefits one by one, that what are the provisions, how do we calculate them, how do we see the taxation provisions, like how much part is being taxed, how much is exempted, and on what conditions they are being taxed. So first of all, let us begin with the leave salary or leave encashment, or even it is called as salary in lieu of leave. You must remember the section here out, that it is section 10 subsection 10AA. Leave salary received during the service or employment is fully taxable as part of your salary income. But if it slowly gets accumulated, then the salary in lieu of leave is received at the time of retirement, and in that case, the employee, suppose if the employee is a government employee, means employee of some central or state government, then it is fully exempt from tax. See, it is very advantageous for an employee to get that amount accumulated, because in that case it would get exempted from tax, as well as the amount will get accumulated and the person will be able to get a good amount. And if the person is a non-government employee, then we have to look at four provisions, and minimum of these four provisions would be exempted. Under this, first is the actual amount received of salary in lieu of the leave on the retirement. Second is the amount which is fixed by the government after deducting 3 lakh from it. Then 10 months average salary for the last 10 months immediately preceding the date of retirement, means just immediately preceding 10 months. Fourth, 30 days or 1 month salary for each completed year less the leave availed during the service. means number of completed years minus the leave availed in the months into the average salary. And salary for this purpose shall include the basic as well as the DA forming the part of salary basically, plus the commission if he is receiving any as a percentage of the turnover which is achieved by the employee. So 10 months period should end at the date of the retirement for salary amount, and the last incomplete year of service for the fourth amount, this one for counting completed years is ignored. We will see that in numericals further. Then if we talk about gratuity as per section 10, subsection 10, important one, remember it. If the employee is a government employee, it talks about in the first point that it is fully exempted from him. And for this purpose, salary shall include the whole salary, that basic and DA for that, but it is fully exempted, so there is no point in discussing it further. But the employees which are covered under Gratuity Act 1972, then they have to pay tax, and the amount which is minimum of these three will get exempted. Let us see these provisions. First is that the gratuity actually received, then rupees 10 lakh, that is the amount fixed by the government, salary drawn, last drawn salary into the number of completed years, into 15 upon 26. And for this purpose, the salary shall be basic plus DA. But the other non-government employees which are not covered under the Gratuity Act, there also you do have the same provisions. But here we take this only, that first two provisions are same, but here the third point is average salary into the number of completed years. You give half month's average salary actually. So for that reason, it is 1 upon 2. And for this purpose, the salary is calculated as basic plus the DA forming part of salary plus the commission in percentage turnover. For non-government employees covered by Gratuity Act, incomplete year of service is considered as full year only if more than 6 months is completed. Like if a person retires after serving for 16 years and 7 months, then in that case the completed year of service will be taken as 17 years. And for non-government employees which are not covered under the Gratuity Act, incomplete year of service is not considered even if it is more than 6 months. Suppose if a person retires after serving 16 years and 9 months, then these 9 months would get ignored, and we will be considering the completed years of service as 16 only. For non-government employees which are covered by the Gratuity Act, the average salary here means the average salary for the 10 months immediately preceding the month in which the employee has retired. Then let us have a look to a question here to understand it better. Mr. Ram Bahadur retires on 4th of January 2015 after serving ABC Limited for a period of 16 years and 11 months. At the time of retirement, his basic salary was Rs 44,000 per month, and he was also entitled to dearness allowance of Rs 8,000 per month. On his retirement, he received 6 lakh rupees as gratuity, and compute the amount of gratuity. So we need to compute the amount of gratuity which is exempt from tax and the amount to be included in the gross salary. He is covered under Payment of Gratuity Act. So we will see it accordingly. Let us see. The exemptions shall be to the extent of the minimum of these three amounts. The first is the amount of gratuity that is actually received, that we have seen as 5 lakh rupees. Then 15 days salary for every year of service that he has undergone. See, here also it is half month's salary only. 15 upon 26, I didn't explain it at that time. See, 4 working days are not considered. It is not divided by 30 here. It is just divided by 26. So it is also half month salary, but here the month is considered to be of 26 days, keeping 4 days as holiday of Sunday or so. So 52,000 divided by 26 into 15 into 17. 17 is the year that he has completed thereout. And the third is the government limit of 10 lakh rupees. So of these amount, we are able to see that the second amount of 5 lakh 10,000 is the lowest, so it will get exempted from tax. Hence, the rest of the amount of 90,000, because he has received 6 lakh of gratuity, will be included in his gross salary and will be taxable. Then further, X has been working with 2 companies, ABC Limited and PQR Limited. The particulars are given to us here. Let us see this question, how it will help us. For ABC Limited, the date of retirement is during the previous year. Service is for 30 years. Gratuity received is 3 lakhs. Salary is the total salary during the 10 months prior to the month of retirement has been 1,50,000. For PQR Limited, date of retirement is again prior to the previous year. Gratuity received is 50,000, and he received rupees 50,000 as death cum retirement gratuity from the concern, out of which rupees 45,000 were exempt as per the income tax rules. And this employee X is not covered under Payment of Gratuity Act 1972, and the Act is not applicable in this case. So we need to compute the exempt gratuity for the current assessment year, that is 2015-16 in this question. Now let us see the exemption. You know that we do have the 3 conditions. We have to see the least of those. So first is half month's salary for each year's completed year. See here we have not taken 15 upon 26. Here we have just taken half. Okay. So half month's salary for 30 completed years, they are seeing. So it's 2,25,000. The maximum limit is of 3,50,000 to be reduced for 45,000, being the amount that he has already got the exemption earlier. So 3,05,000 only, and the actual amount of gratuity received is 3 lakh. So here in this case we are able to see that this the first amount 2,25,000 is the least amount. This is the least of 3, so it would get exempted. So the rest of the amount, because he totally received 3 lakh rupees, so 75,000 will be chargeable to tax during the year. And the total taxable gratuity for both the companies that he's received, 5,000 from the earlier one and 75,000 from this one. So total 80,000 will go to taxability. And the salary for this purpose, average salary of 10 months immediately preceding the month of retirement is equal to the total salary received during the 10 months divided by 10. So it's 1,50,000 divided by 10. So 15,000 is being considered for that. Thank you. If you have any queries, do write to me. We'll meet in the next video lecture. Till then, take care.